Oil technical analysis, September 22nd, FXEmpire.com. The light sweet crude market fell on Wednesday and on large volume as the Fed announced that it was keeping the interest rates low and that the economy remained to have a weak outlook. This sent fear through the markets and traders sold off most risky assets, with the light sweet crude contract being no different. The lack of demand now becomes a question in this market. As the economy falls, producers will produce less. The triangle that we had been following, potential triangle in this market, has broken down. So this is looking more and more bearish, truthfully. We are not sellers, though, because we want to see 80 give way decisively before we do that. We could, instead of having a massive fall, could just find ourselves pinging around between 80 and 90 in the meantime. So caution is a better part of valor, especially in a market that has fought so ferociously to stay in an upward channel. And also, we do know that this marketplace can be quite whippy based upon dollar strength, which of course we got a lot of today, so it brings down the price of oil. Looking at the Brent market, it's a little bit different situation. It looks like we are trying to bust through the 107.50 area, and really the real target's going to be a dollar. At the meantime, though, we are not willing to sell it yet. We think that there will be support come in at either 105 or 100. Or perhaps even 102.50. So right now, we're not willing to sell. We certainly don't want to buy, though, because this is starting to look weaker and weaker. We expect a pullback. At this point in time, we're going to choose to treat that as a buying opportunity when we get supportive candles at one of these levels. If we can somehow bust through all these levels, that would be extremely bearish, and we would become, at that point in time, aggressive sellers of the Brent contract. In the meantime, though, we are simply waiting to see if we do get buy signals at support areas that make sense.